Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here. Another great episode of The Key City of Angels. I have with me Tiffany Nyiri
Very
of
good.
Active Lending Group. Yes, got the name right. I appreciate it. I'm really interested to talk about this topic of reverse mortgages because this is generally related to the baby boomers, and they're all reaching that retirement age. And this is where this type of loan comes into it. So thank you for coming on. I really appreciate it.
My pleasure. And we want to talk about it and get it out in the open because a lot of people think reverse mortgage is a bad word.
Yeah.
And it's like the elephant in the room, and it's not. It can be used for so many different purposes, not just the need-based. So
Yeah.
we need to get it, we need to get it in the forefront because it is a viable option for your retirement.
Yeah. So why don't we jump into it? Explain to people listening, what is a reverse mortgage?
I'm so excited you asked me that because I actually pulled up a definition from this amazing book, Navigating Reverse,
Okay.
by Dan Holquist. Holquist, I don't say it right every time, but he is the guru of reverse mortgages and he writes about it so that people can understand in a simplistic way. So here we go. A reverse mortgage is a loan that uses a home as collateral and defers repayment until a later time, typically when the home sells. Second part of that, it allows a homeowner to convert part of the equity in their home into cash without having to sell their home or pay additional monthly bills. This loan is extremely conservative. They will not let you pull, even if you're 85 years old, they're not going to let you pull more than 50% out.
50% of the value of the home.
Yes. And our values are pretty high right now. And that's a beautiful strategy. And we're hopefully going to have time to jump into that strategy because I just get all excited talking about it.
Yeah, you're like me. We tend to nerd out over this
Oh,
stuff.
I read this for fun and I know everything in the book, but I read it. I read it over and over.
Oh yeah, my wife, she's like, I listen to Crime Junkie. I listen to crime. What do you listen? I listen to real estate podcasts. That's boring. I'm like, so is murdering people, but that's cool. Whatever. Yeah, no judgment here. Okay, so I guess over the last few years, whatever, what have we been seeing as far as reverse mortgages? Have more people been pulling them out? Are we seeing a slowdown with them? What have you been seeing?
I took a screenshot today of some investigation that I did.
Okay.
It actually surprised me
Okay.
because more loan officers are actually, how do I say this nicely? More loan officers are dipping their toe in the reverse world than they have the education to be doing.
Fair enough. They're doing something they don't have the knowledge to do.
And this is not a typical loan. You don't have checks and balances like you do in the forward world. Forward
Hmm.
meaning FHA, VA, conventional, the
Hmm.
typical type of loans that you would get prior to being 62 years old. So let me just go over some numbers here. And this is from the national, let's see, this is on the HEC reverse, home equity conversion mortgage, the traditional reverse mortgage. There are quite a few. So let's see, year to date, 12,500, 2024, 26,521, 2023, just under 33,000, but 2022, 64,489 HECM loans in 22.
Wow. Nationwide.
Yes.
Okay.
So the year 22 was in the midst of COVID, just coming out of,
Yeah. Coming out of the
trying to come out
shadows
of it.
where, yeah.
Yes. So that is when something happened. What do you
Mhm.
think it was?
Ooh, I think they are getting to retirement age and they need the cash.
So yes, I think that is definitely one of the items. A lot
Okay.
of people retired early, got paid
That's
out,
true.
weren't prepared, retired early, or got asked to retire early.
Hmm.
Number two, our home values were at the peak,
Yeah.
almost the peak, let's say, if we didn't have
Hmm.
a crystal ball then,
Right.
but they were very high. So
Mm.
people that maybe couldn't do the reverse in 2020 could in 22 because
Got
their
it.
property values probably went up 50 to $100,000.
Right. Now, so anyone listening, just the reverse mortgages start, you qualify when once you hit 62. And
You
then
can,
as you
yeah,
get older, the more equity you can pull out.
62 in the world of reverse is like being
Mhm.
20 years old again. It's very young, very young.
How many people do
Okay.
you tell that to and they get super like, oh, thank you.
That's my gig. That's what I do.
That's- Anyways, continue.
My
Go for
ladies are
it.
very excited when I tell
All
them that.
right.
And it's interesting. I do a lot of reverses for ladies, single women.
Interesting.
Mhm.
Okay.
Spouses passed, a house got left to them free and clear by their family members, something like that. And Social Security, you cannot live on the state of California. Oh,
And when someone passes away, you get the higher of the two for Social Security checks. You don't get both. So you get whichever one's higher. So your income in theory could be cut in half if
cut in
that's what
half.
you're relying
We,
on.
yes, yes. And then inflation and all the other little things that go along with it.
Right.
Anyway, so 2022, we just think the values came up, early retirement, and people were looking for something to supplement income and or a strategy is not pull your Social Security out until you are older, but you have to have something to get you
Right.
to the 67.
Mm-hmm.
Okay, so this loan, we're not going to have enough time to get into all the strategies behind it, but this is going to be enough to make your audience think, huh, this is not a need-based loan. This is a strategic loan for my financial well-being. And once people learn that the reverse mortgage isn't a bad word, because back in the day, it was a terrible loan. There were no guidelines. You just raised your hand. It was like the Wild West. They let you pull 80% of your value out. You didn't have to qualify. You didn't have to take counseling. You could kick off your spouse if they were too young, all kinds of
Interesting.
things. So what happened is, just to go back on one of the myths, let's say husband, wife. Husband is 70, wife is 65. At 70 years old, you're getting a lot more money than the 65-year-old. And you
Mm-hmm.
have to use the lower age of the two.
Mm-hmm.
Okay. So what they did back in the day is they kicked off the 65-year-old. Bye-bye, not on the loan. When the 70-year-old passed away, they got a little pink letter in the mail that says, I'm sorry, but your loan is due and you're not on the loan. You need to get out of your house.
Oh,
And that was a decision that a borrower made, not the loan.
right.
It's not the loan's fault you took advantage of the guidelines.
Yep.
So
Totally agree.
that leaves a bad taste in the mouth for the family members. Oh my gosh, my mom's getting kicked out of her house. That
Ouch.
guideline is very tight these days, very tight. If you are married, you cannot just take your wife off the loan. You can't take your husband off the loan. Okay. There has to be significant situations where that would be an underwriter decision.
Could someone, let's say using that scenario, couldn't that person just do a refinance with a new reverse mortgage?
Yes, you absolutely could. Yes.
Yeah.
And that was a way to get themselves out. But a lot of the family members like, oh, we're just so upset. We hate this loan.
Got it.
Okay.
So emotion took over instead of making a
Emotion
business
took over,
decision.
or they just, if the house still had equity, which back in the day, they allowed you to take so much equity out. A lot of
Hmm.
people were underwater if the market was low.
Mm,
Keep in mind, we
right.
don't have a crystal ball. We don't know what the market's going to do when someone passes. All unknown things. So I don't want to get too much into the myths and busting them and things like that because this is a whole new loan. It is the
Yeah.
modern reverse mortgage. And if we could
Got it.
rebrand it with a different name, I'm sure they would. But it's
Right.
exactly what it is. It's a reverse mortgage. It goes backwards. You're
Yeah.
utilizing your equity so that you can live your best life or make really cool financial decisions.
Yeah. What would be, what were some of the coolest decisions you've seen borrowers make?
Okay, so they can do all kinds of different things. You could fund your care. You could pay off a spouse if you're getting divorced. Silver divorce is a thing.
Sure.
Sequence of return risks. Now we're getting into some big words where your financial advisor would be like, whoa, that's awesome. But it doesn't mean anything to you. Again, if you're not pulling Social Security yet, but you do need the income, the line of credit option in the reverse is going to be your best friend. And your financial
Right.
advisor, once they understand it, is going to be
Hmm.
like, done. And I could guarantee it, unless that person doesn't know math, because this is just a big old math problem.
Right.
And oh gosh, you could do relocation. Let's say your kids move to San Diego, which is a high price in California, maybe
Hmm.
compared to Riverside County. And you want to live close to your kids, and it's just not affordable. You don't, how am I going to qualify for the loan? I'm going to only net about $500,000 if I sell my house, and I can't buy in San Diego for 500,000 and pay
Right.
cash. Okay, why don't we think about doing a purchase under the umbrella of reverse, and we buy that $800,000 condo in a cool community with stuff going on and bunko and pickleball and all the stuff that goes along with our seniors. And we put a reverse in place for the difference. So we can put 500,000 down and we could buy an $800,000 condo. And we're going to get a loan for 300,000 under the reverse. So
Right.
payments are optional. Some people
Hmm.
make payments because that's their strategy. Others like, I'm good. I'm 75. I'm going to
Not
go
my
have fun.
problem.
I'm going to go have fun. And
Yeah.
we do numbers. Again, you have $500,000 of equity in this home and you're 75 years old. You're not going to use it all.
Right.
You're not going to
I
use it
mean,
all.
I guess for me, it's like I probably try to max out the reverse mortgage. I'd rather keep the cash, especially if I don't have to
But
make payments. It's like, what if I needed to renovations? What if I need it just to live off of? What if I want to buy other property or do something else with the money?
let me give you a different scenario. You're going to love this. Rick, you're going to get all goofy with me on this.
All right, let's do it.
So what if we netted our 500 from the sale of our house in Riverside County and we
Hmm.
found a little $700,000 property in San Diego? Okay,
Okay.
that means we only need 400,000 to buy it. We've got that extra 100,000 somewhere
Yeah.
that we don't have to use. What are we going to do with it? Are we
So
going to
many
buy a
things.
house in Alabama? Get some rental
Right.
income? Are we going to give it to our financial advisor so we can earn our, I don't know, 6% right now, whatever people are
Yeah.
earning? I don't know. That is something that you get to decide,
Right.
but you don't have to use it all. And most people would be like, I'm going to use it all because I'm going to pay cash or I'm going to get the lowest loan amount I can. I'm going to teach you about strategy. And if you have a financial advisor, we're going to powwow together and we're going to talk strategy.
Like
Because
I wonder if people would do things like building out an ADU, right? Because that's some of the conversations I've had with people. It's okay, you do the reverse mortgage, you get all this cash, that's great, but that cash you can burn through real fast between inflation, whatever. Or you spend the 150 grand, convert the garage to an ADU, and now you're getting 2 grand a month in rent. And
so many options.
are you seeing a lot of those types of projects happening? Or is it,
Not necessarily. I see those
yeah,
projects happening. They're just not under the umbrella of reverse. Number one, in our area, it's sometimes tough to find a property that has enough room for an ADU.
or just even converting the garage or whatever. But,
Yes.
and you reach a certain age, I don't want to be a property manager. So, like, I get it. It's a different lifestyle.
Yes. Now, what if you decided that you were going to stay in your home because it's conducive to growing older? Okay, single story, driveway's good, near your doctors, near your dentist, all the good stuff. But your kids were renting. Okay, and it's tough to buy in California. It is very tough
Yeah.
to buy in California. However, you tell me, Tiff, when I pass away, this house is my kids. This is their inheritance. I would counter, okay, are your kids renting right now? Yeah, it's sad. I know. I wish I could help them. What if we, what if we look at this a different way? You just told me the house is the kids. Why don't we do something where you can give them their future inheritance right now?
Hmm.
Right now. What if we utilize the equity? We're able to utilize $200,000 easily. No payment. This is not a HELOC. This is not a
Right.
home equity line of credit where you have a payment. Okay, those rates start about 8.99 right now.
Yeah.
So what if we were able to give them $200,000 for a down payment? What if you have two kids? Each gets 100,000. And that's nothing that you have to be responsible for as far as payment. But you're allowing your children to buy right now so they can raise their children in an environment that is not going to make them get kicked out if someone's selling the home, close to the schools, close to what you're doing. And wait, you're going to build equity and you're having appreciation on two houses.
They basically just double their position.
Yes. And again, if that property has a place for an ADU, we'll only use half that money and we'll use the other half to build the ADU.
Yeah. So you bring up something interesting. It's like the person, they do the reverse mortgage, they pass away. Now the kids can either refinance out of it
Yes.
or they can sell it.
Yes.
What explain, because this is the part I never quite understood. Explain the process for selling. Is it, hey, now they have to start making payments, or do they have so many months before they have to start making payments? The loans due? Like, how does that work?
Okay, so interest keeps accruing every single day on the loan, but the kids aren't doing anything.
Right.
Okay, they're communicating with the servicer. Hey, mom and dad passed. They were the last on the loan, and we're in the process of getting it ready to sell.
Okay.
Okay, just like a normal loan. But you should communicate with the servicer because this loan is accruing interest, just like any other
Mhm.
loan,
Sure.
just like any other loan. But you have the 6 months, and
Mhm.
with permission, you can have another 6 months if
Okay.
needed. But again, you need to communicate with them or you will be getting very interesting sounding pink letters in the mail.
Have you ever seen something go south?
I have
If you
seen
have six
people.
months to a year, it's like,
Mhm.
it's either the price or the agent. You can usually figure it out.
Usually somebody has plans for the money. Okay, so we want it to sell. But no, I've
Right.
never seen anything just sit on the market and the reverse servicer get upset. No, usually there's more
Yeah.
communication and or there's attorneys involved or one of the kids is super eager to go buy something with their share.
Either, yeah, yeah,
Yes.
yeah. Yeah, and that makes sense. I mean, I would
No,
think that if I had clients who inherited property with a reverse mortgage, I'd almost let's underprice it where there's still equity, but then that way it gets it moving faster because you are on some sort of clock.
with any house almost, you want to get rid
Yeah,
of it if that's the plan. But let me play devil's advocate for you real quick.
go
What
for it.
if they passed away and the market was down? And they were a
Okay.
little bit over encumbered. Let's say they lived a very long time and had a beautiful loan for a very long time. And the house is worth 500, but they owe 550. Kids can come in and refinance that for 95%. So they'll get 5% off of the value, but it has to be over encumbered for that benefit to kick in.
Which is smart because if you're the lender, that's still a far better deal than it going into foreclosure.
And the banks, these reverse mortgage, they absolutely do not want the home back. That is not their
No.
goal. That is
Right.
why they're very conservative in what they're going to allow you to utilize of your equity. So it's
Yeah.
easy to do. It's just a regular loan. You just have to communicate. And I give this book and I see I tab these things. I
Yeah.
tab them and give them after you close your reverse mortgage with me. And I tell you to put that where your trust documents are. And I highly
Oh,
suggest everybody
smart.
get a trust and a will and all the goodies that
Oh,
go
yeah,
along
no
with it.
kidding.
Yes, because then your kids, I put my business card, are gonna know what to do. This is very easy to read. Is what do I do when my parents pass away? Oh, I do this. Cool.
Yeah, and you're done.
And you're
That's so
done.
smart. Because what we started doing on our end is we actually have a spreadsheet with all of our contact information for everybody involved in everything, from our insurance brokers to our lenders to our property managers. It's like the last thing you need is for somebody else to have to dig through all this stuff. They
No,
may
no.
not even know there could be a reverse mortgage on it. They may not even know.
And we invite our borrowers to bring anybody into the conversation that they feel needs to be
Mm,
involved. Some of my clients are they're like, heck no, my kids don't even know what I'm doing. And others like, I feel the need to bring my son in and we want to talk to him. And I'm sure we'll video chat just like this.
yeah.
Seniors video chat like this all the time.
Yeah, they're just really close to the camera.
No, they do great. They do great. And
Yeah.
that I say that COVID helped with that.
Yeah, for
Yep.
sure. Yeah, if like my parents had done a reverse mortgage and if I were the executor of the trust, I think I would want to be part of some conversation. Maybe not all the details, but maybe there'd be like a separate meeting at the very end of, okay, just explain to me what the next steps would be. Because the last thing you need to do is leave people in the dark.
Exactly. It's just like a regular loan.
Yeah,
However, the money that you get out is not taxable.
that's one of the
So
best
you
parts
pull
about real
money out of your
estate.
retirement, that's taxable money. Okay. You want to do something fun. You want to travel for 6 months on a ship. You want to pull out 50 grand. That is taxable money.
Yeah.
And your financial advisor is going to be like, whoa, you're going to have to die at 85 instead of 95 because you just pulled out a chunk of what I'm using to forecast how much
Hmm.
money I can give you every month.
Yeah.
So your interest is, it's a whole big thing. And a financial advisor and me would have a really great conversation about this. I know that you had a couple questions, but I really want to touch on something super cool,
Go
if you
for
don't
it.
mind.
No, not at
Okay.
all. Go for it.
So these loans, HECM, home equity conversion mortgage, the basic reverse mortgage, has this really cool feature called a line of credit. I don't know
Right.
if you've heard about it.
I know of
Um,
line of credits, but go on.
Okay, see, these are line of credits that are not like a HELOC, not like a home equity line of credit.
Okay.
Okay, they're very different. They're super cool. So I'm gonna use my dad as an example. Again, very conservative loan. So let's say the house appraises at 850. He's 76 years old. They only allow him to utilize $340,000. That's it.
Yeah.
Okay, very conservative. So we utilize some of the money because he wants to do some strategic work with some of his investment properties. Okay. He doesn't need the loan, but it's a strategy. So we utilize some of the money. He sells one of the investment properties, pays that back. The cool part is we got him a line of credit that just sits there. It is not coming out of the equity yet until you use it. But let's say your interest rate is 6.5. And the line of credit has a growth factor of 7%.
Meaning it can go up to 7.
7%
Okay.
growth factor. So $200,000 at 7%, you're making $7,000.
Got it.
It's growing
Yeah.
all the time, constantly, every month.
Interesting.
So you're going to have, let's say you never touch that $200,000 in 5 years. You're going to have so much more money that you can utilize for the property, for your kids, for an investment, for travel, for in-home care. You don't know what life's going to bring you in 5 years,
Yeah.
but you want to stay in your home
Hmm.
and you don't want to depend on your children. Some people don't even have children for that. Some people don't
Yeah.
like their children. They don't want them to do that.
Yeah.
So we need to be self-sufficient, and this line of credit gives you so many options. Again, not taxable, growth factor, never frozen, even if you're underwater, never frozen.
Interesting.
So you're in LA.
Hmm.
The people that had reverse mortgages at the Palisades fire, which I know one, she
Hmm.
unfortunately had utilized all of her line of credit already. However, had she not, it still would have been open for her to use, even though there was no house.
Interesting.
Cannot be frozen.
Speaking of which, what would happen to those types of homeowners? It's just if the
Yeah,
home's
they're covered
gone.
under FEMA and all these other things, so
Yeah.
they can't foreclose on them.
Got
But
it.
yeah,
Okay.
but your insurance is going to kick in and you're either going to start to
Sure.
rebuild or you're going to sell the dirt.
Yeah. Yeah. Most people I've been talking to through the grapevine have been talking more about rebuilding than they are selling.
Yeah, this gal is not going to rebuild. And unfortunately, I did not do her reverse mortgage, but she was very underinsured for the area.
That's super common.
And I just looked at one of my approvals on a line of, on a reverse I'm doing right now, and it's very clear. We will, once we get the appraisal back, we may need to update our insurance amount because currently they're
Mm,
only insured for 700,000. The property's worth 1.7. So we have to look to see what the structure is actually worth because dirt doesn't
Mhm.
burn. So we need to be insured for the structure to be rebuilt in today's days. Like today's,
Yeah,
they're
standards.
not going
That's
to
been
let
one
her
of the big
build.
problems.
Yeah, they're not going to let her build from 1976 how it was built then. You're going to need all this window and fire safety and all kinds of
Oh
stuff.
yeah, solar panels, all that kind of stuff.
Yeah. So again, we just got her appraisal back. So now we have to go back to the insurance company and make sure we're properly insured.
Yep, that's been one of the biggest things. Is it happened in was it in Laguna Beach, like that
Yeah.
row of homes. I met someone. He's yeah, I was underinsured about 600 grand. And the guy's I work in real estate. It's just you just didn't think about it. First of all, you don't think it's going to happen to you.
Yeah.
That's really the kind of thing. I think that's probably the biggest ones. Oh,
Yeah.
and then even if it happens to me, what are the odds of a total burn down? It's all these layers of
No.
what ifs. Yeah, right now we know. And like I'm having conversations with all my clients about it.
Yes. And it's a worthy conversation. It's not great because their annual dues are gonna go up and they're on fixed income. So we're going to need to do something about it. The gal that I'm doing right now, poor thing, she doesn't even have money to go to the movies with her girlfriend. But she's got a
Hmm.
free and clear house worth 1.7 million
Yeah.
and she's 72.
Yep. How long she owned it?
Forever. Her dad built it.
Yep. There you go. Yeah.
And it's got peeling paint. It's got a deck that you can't walk on. It's got all these things that we need to fix.
Mm,
But she's going to get an extra $1,000 a month.
okay.
She's going to get a line of credit of 200 and some change.
Okay.
And we're going to get enough money to do the work we need and pay off the HELOC that she has. She does have a HELOC of, I don't know, 80,000.
Yeah.
But she's already burnt through that. So this girl, do you think her life is going to be changed?
Yeah, just a smidge.
Yeah, she's going to get to go out to the movies. She's even going
Yeah.
to get some popcorn.
Yeah, it's an interesting perspective because people, especially older generations, they just assume that they were going to be taken care of because that was always like the culture. Yeah, you have Social Security, you have this, you have that. And then people find out that your Social Security is based on how much money you made. Or you did have the stereotypical, like one spouse didn't work. If you're not working, you're not putting into Social Security. So
Well,
you have
and
a
then
lot of these challenges.
we don't expect to have to paint the entire house. And in her area, it's all tri-level and the
Oh,
entire house is
wow.
peeling. So that's going to be probably a good $8,000 to $9,000. Where does fixed income kick in on that?
Oh, yeah.
Where do you get that?
Yeah, totally agree.
Your kids? That's what
Assuming you
I'm
like
getting
them.
calls. I get calls from kids. Hey, we got to do something because I can't afford to keep giving money to my mom.
Yeah.
I've got two ladies, Northern California, that each of them give $1,000 to their parents in Scottsdale.
Wow.
Their home is worth 1.4.
Yeah. Actually, one of my mentors, he always joked because he always took care of his mom. And he's, yeah, I had a reverse inheritance, is how he, and then when she wanted to move out here from, I think, Michigan, she's okay, but I want to live by the beach. So what is he's okay? So he actually bought her like one of those mobile homes in Ventura that's right by the beach.
Yep.
And he's and we own it. And it was like
Yep.
back then they would sell for like 80K. So he's like, yeah, fine, I'll buy this. She's super happy. She could walk to the beach. Then when
Yes.
she moved out, he just sold it. Yeah, I think he made like $1 on it because they didn't appreciate it well back then. But he's like, whatever, still better than the alternative.
Yes. And she was happy. And that was
Yeah,
his goal.
exactly.
Obviously, that's why he raised his hand and said, I will do this for you.
Yeah, totally agree.
Yeah.
But yeah, I would imagine I didn't even think about just the kids being the one to make the calls.
Oh, that, that
Because
was, like I said, that was my call the other day.
yeah, because I would have that conversation. Luckily, my parents are doing okay, but if they came up to me and said, Rick, we need money monthly, of course I would step up to the plate. But I'm like, I don't mean to be a dick, but like, we have to have a bigger talk than this. You
Yes.
can't just give somebody the money. It's like, okay, let's talk about your property. Let's talk about your investments. Let's have a wholehearted conversation here
Mm,
if I'm going to start giving 500, 1,000, couple thousand bucks a month.
yes. Do we need to downsize? Is this where you want to? Yeah, there are so many other
And they're awkward
conversations, and it's
conversations.
very hard sometimes. Sometimes parents want to be a little tight-lipped about what they've got going
Hmm.
on. And we have to keep nicely or not pushing, asking questions, or you bring in a third party that just says, hey, what do we got going on?
Yeah. I think that's because that's a good point. I think it was Dave Ramsey where people were asking him a similar question. Hey, how do I talk to my parents about money? And he said the problem is your parents raised you. They're the ones who's been telling you how to live your life your entire life. It's hard for them to switch the mindset of now you're telling me. Makes it real tricky.
It is very tricky, and I'm embedded in the senior community.
Right.
I work with placement agents and people that help organize your stuff. A lot
Mhm.
of our people have stuff. And
Yeah.
the new thing is let's not leave our kids with stuff.
Yeah.
So a lot of people are raising their hands going, hey, I need help because I don't want to leave my kids with stuff.
Yeah.
My
Oh, sure.
collections, all these collections that we've got,
The
the
running,
little things and the
oh, yeah, the Russian
Coca-Cola.
dolls and yeah, the running joke with my mom, she has like this china that's for me, like all these plates and stuff. Next time I come out, I'll bring it to you. I'm like, give it to my sister. I appreciate it, but I have a set. What are you seeing? Because it's such a conservative loan, but are
Mhm.
you seeing any issues in terms of qualifying?
Yes.
What are some of the common ones?
I refinanced when the market was low and I got my 2.75, but I pulled out all this money and the money
Hmm.
is gone. But now we're over encumbered because a traditional forward loan doesn't have their rules are, let's just say 80% of your value. I need you below 50. I need you to have a bunch of equity,
Mm.
a bunch. Your house does not need to be free and clear. I just need you to have a lot of equity based upon your age. It's an algorithm, just like life insurance.
And that's because, just so we're clear, it's because every day it's accruing interest. So they need to
Yes.
make sure there's enough equity in there, assuming the home value doesn't change at all between now and the person by the time the property sells.
We do an amortization chart based upon 4% appreciation, which is
Okay.
standard.
Yeah.
California on average is 6.5%, not counting COVID.
Right.
So we're pretty conservative for the state of California. If I'm looking at other states, I might adjust it a little bit.
Sure.
But for California, we keep it about 4% appreciation. And then we show your appreciation, we show your loan balance growing, we show your line of credit growth. And then
Mhm.
you can look at it and it's very simple to look at and go, oh, okay, by the time I'm 95, I'm still going to have $400,000 of equity. Cool.
Yeah.
But again, yes, it's conservative because the bank, again, does not want your house back.
Yeah. Most banks don't.
No,
No. I
no.
will say when my first job out of college was buying foreclosures at the courthouse
Mm.
steps. And
Oh,
they're yeah, wild. Because it's
yes,
like auction, they're talking so fast, then
yes.
like you're bidding against other people, but there were times when the bank actually would bid on the property because they knew that it would actually sell for more. So I have seen it to where the auctioneer would also be placing bids on behalf of the bank. It was
Now,
rare, but I've seen
yeah,
it.
isn't that a strategy? Because my sister is in the REO world and she was saying
Mhm.
they do that specifically if there's a second on the property. Don't want to dive
Mm.
into all that. You can interview her on all that if you wanted to, because at one point we had 800 REOs in
Oh well.
various stages of their take back, so to speak.
Yeah.
Yeah, it was wild.
It
It was
was
sad. It was
it was.
wild. It did not have to happen if the banks didn't get so crazy with the loans they were allowing, but whole other
Yeah.
conversation.
Oh, for sure. So many things. But yeah, the equity part makes sense because as far as a person qualifying, because if they're retired, it doesn't really matter as much if there's a fixed income because again, they're not really repaying the loan. It's really just what's your age, how much equity do you have in the home, and
We
go from
don't, yeah,
there.
we don't qualify in a traditional way. Credit scores don't really matter.
Oh,
Ratios
interesting.
don't really matter. We look at residual income and we've got all kinds of beautiful things that we can do to raise that if needed. Again, the people that don't qualify, we present them with something else saying, okay, you've got X amount of equity. What if we sold and did a purchase? Maybe something less money.
And
Because
that's your
my
solution.
goal is not to have them have that $2,000 house payment when they're 80. That's just not right. And they're struggling to do that. Because again, things come up in your home. When you own a home, you get water heater, you get paint, you get higher insurance premiums. Things come up.
Yeah. So that brings me to another interesting question because not everyone should do a reverse mortgage.
No.
Or maybe the better way is maybe they shouldn't do a reverse mortgage on that property. Maybe that's a different question. What type of like when are those conversations happening? Hey,
At the beginning.
you shouldn't do a reverse mortgage. You really should sell.
Yes, we ask qualifying questions mainly because the reverse mortgage is not an expensive mortgage. It has costs associated with it.
What's the average interest rate? Is it usually so many
Very,
points
very
higher?
marketable, very much like the market. So right now, I
Got
think
it.
we're doing one at 6.5,
Okay, so about what the market
very
is.
much in the
Okay.
market. Yes. Nothing, nothing. Now, there are some fixed rates, proprietary jumbos that are
Mhm.
they're in the eights and the nines, but those are not our true Peckham, which is
Got it.
very nicely priced. But yes, not everybody should get it. If you're planning on moving in a year, no. If you're planning on moving in two, we need to know what is going on. Why do you want this loan? Is it something that this is the only option? Okay. Again, this is a strategic plan. So maybe they have a strategy. But
Right.
yes, a lot of people, I have told them that they probably just need to sell the home
Yeah.
and go
I
invest in something else.
I almost wonder, oh, my house has deferred maintenance. I'm going to do the reverse mortgage and then do the work on the house. But then I could also make the argument, it's like, yeah, but now you're back to square one. Yes, your house has been fixed up, but you're not really that much better of a financial situation because all the money you got from the reverse mortgage might have been used on the house. So if unless that's your plan, like to your point, unless that's your strategy, then it's fine. But if no, it's going to help with retirement, this, that, and the other, it's like, yeah, maybe let's sell the old home that you've lived in for 100 years and go buy something that might be newer or in your case, like a condo, something that might be in the long run will put you in a better financial situation.
Yes, and I'm going to present any option that I think based upon our conversation, even if
Hmm.
I think it's a wild card. You know how you go to those shows and they show you that wild card house that
Yeah.
wasn't what they were asking for? I will show them an opportunity that they may not have known existed. They didn't ask for it, but it's going to open more communication because they might be like, oh, well, my daughter does this over here and I could do that over there. And they could put the puzzle pieces together just from me talking about an opportunity. So we have to listen.
Yeah.
Sometimes we listen to what they're not saying. Like, for instance, talking to the gal that couldn't go to the movies, she sounded depressed.
Yeah.
And I had to talk to her about, what do you do for fun? What are your hobbies? How can we
Interesting.
how can we enhance your life? What can I do? Do you like to paint? Is there a lot of light in these rooms? Like, we go off in different directions of conversation that you would not normally go off in a lending conversation. If I
Right.
was doing a forward purchase for new home buyers,
Hmm.
definitely not the same conversation.
Yeah. Real estate is part emotion, part logic.
Yes.
And it's the house you wake up in every day. What I've been noticing in this market is we have the types of people who are going to buy and sell because of death, divorce, whatever, like the normal people, we'll call it, like normal reasons. Then you have the people who shouldn't move, right? There are people who, no, I do a lot of equity reviews for my clients. So every year we
Mhm.
meet, we go over, hey, what's the home value? I'm not saying you should sell, just it's good to keep track. I've done like 10 of them. So far, none of them should sell. I actually told them, you shouldn't sell. We're just not in that world yet. But then there's this whole like new category or newish category where I call it the lifestyle category. It's the people who don't have to move, but they may want to move because, you know what, don't really like the weather. Or like in our case, we have a 3 bedroom house. We have one kid. Yeah, it might be nice to have a fourth bedroom. And I don't feel like doing an addition to my house.
Yes.
And these are the
Yes.
type of conversations you probably have to have with these people. It's, are you happy in your existing house? What's the lifestyle you want?
My motto is live your best life, because, and then
Yeah.
my clients will be the first ones to tell you that they know their days are numbered. They think about
Yeah.
this and they don't want to. It's not something that you always want to think about, but they do.
Hmm.
And they want to get things done and they want to have some fun, some freedom,
Yeah. As they should.
or they want to go buy a house in Mexico, or they want to go do
Right.
some cool stuff with their money.
Yeah, absolutely. Absolutely. Is there any kind of like last minute things that you think people should know about the SoCal market with reverse mortgages or reverse mortgages in general? Yeah, I'd love to get your kind of last minute
Yeah.
take on it.
Don't be afraid to talk about it.
Okay,
Definitely.
fair
Don't be
enough.
afraid to raise your hand. Because again, it is not always need-based. A lot of people that I talk to about reverse mortgages, when I say that what I do, oh, I don't need one of those. And they back up like I'm talking about COVID.
Do you think it's because they don't want to admit their age? I know that's
No,
such a mean thing to say, but just curious,
no.
is it like a
Because
psychological?
they still have the stigma from their grandparents or their mom
Mm,
or their auntie that had a reverse gone bad, or they heard something about it. Like I'm guilty. So I've been doing this almost 30 years. I was in the forward world only, and one person told me, oh, you don't want to mess around with reverse mortgages. They're bad. And I believe that one person
mm,
for many years of my career.
yeah.
And then I met my mentor, and she completely changed the way I thought about reverses because I educated myself. I wasn't the
Sure.
person that stuck my head in the sand and just believed that one uneducated person.
Yeah.
And
Oh,
our goal is, I feel like we're grassroots, getting the word out that these loans are not your grandmother's loans. They are modern. They have really cool strategies. They have counseling. You have to know what you have to go to counseling. You have
interesting.
to know what you're doing. So don't be afraid to raise your hand and just learn about it. And listen, a lot of my referrals come from people at church that someone passed away. So don't be afraid to help someone else.
Yeah. I agree. That's always been my I just met with people today. They're talking about maybe renting out their property. I'm like, I'd rather show you how to get it rented, rather show you the process, explain the process, kind of help a person out. Does it pay for it? Maybe. Worst case scenario, I helped someone out. Yeah.
Yeah.
This has been amazing. I really appreciate it. How can people get a hold of you?
Yes, I'm sure that we're going to have a lot of my links. I'm all over YouTube and Instagram, Facebook. Facebook is my go-to. I'm not quite 62 yet, but when I am, I'm absolutely putting reverse mortgage on my home. The line of
Yeah.
credit growth factor is my favorite thing ever.
Yeah.
That will absolutely be on my house. So our phone number, 951-724-5334. And all of my information, I'm sure will be
Yeah. We'll
clickable
have it.
somewhere in here. But our website is Tiffany, the number 4, loans.com. Easy enough.
Cool. All right. Thank you. And thank you everyone for watching. And I will talk to you guys next week. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.